Bitcoin dips down below 9,100, almost 9,500 a couple days ago, 9,100, but the buyers seem to have stepped in momentarily. Are we going to see further correction on the weekly time frame in the process of this macro bullish trend, or are the buyers strong enough here to support us on this liquidation grab below the range low? All these and more in today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live here in the studio. Today is Tuesday, February 4th, 2020. This is your daily source for market updates, sentiment, and news for traders. Hopefully you guys are doing fantastic wherever you happen to be tuning in from, whether that is YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you guys want to support the show, make sure to check out, I've almost got it. Make sure to check out our socials as well as subscribe here on YouTube and like the video if you have not already. We've got a fantastic show for you guys today. We're going to break down our market positions. We're going to talk about how we have managed this recent downswing in Bitcoin as well. Talk about the short position that I let you guys know about yesterday, as well as the hedge position that we put on yesterday as well. We're going to be talking about the Forex markets today, and we're also going to be focusing on the FATF's kind of the new information that's come out about that, because there is a lot of information about this impact, the impact that this will have on the cryptocurrency markets as well. A lot of people are worried and upset about this. I think that a lot of people aren't paying a lot of close attention to this, unfortunately, in the global scene, because there's a lot of what to do about Pakistan in the FATF right now. And I think that people are largely ignoring the implications on the broader cryptocurrency markets, kind of because of that focus of the media right now at this point in time. But we don't do that. We're going to bring you guys the information that we feel is relevant to your market and today's best analysis that we can. Before we get started, of course, I want to give you guys some updates as far as what's going on in the community. One, there is a new premium member strategy video. It's not there was a previous iteration of this video, but I have revisited it over the last 2 days, redone it, uploaded it with new information and new content, as well as redone the audio and the video on it. That is going to be on volume profile, session volume, the indicator. I go over trade entry, stop and target strategies, trade management, trade execution, and how to utilize it to scalp or to have excellent entries and exits for your positions. So I go over that. That is uploaded to the online academy that the premium members have access to, as well as I have also redone the premium webinar on BitMEX. Not the BitMEX 201 video, which is the comprehensive, very robust video, but the BitMEX 101 video, which is going to go over layout, overview, order explanation, and execution and management. Good comprehensive introduction to BitMEX, and that information can be applied to a lot of other margin platforms as well. Very similar to Bybit, very similar to BitMEX. And of course, we have here on YouTube the Bybit tutorial video, which you guys will want to go check out if you have not already. It's in the Trading Crypto 101 playlist. Don't forget, guys, we are giving away a free t-shirt, so make sure to head over to crackingcryptocurrency.com/giveaway. There will be a link down in the description after the video. And wanted to remind you guys to check out our new member blog. Our Discord tutorial blog. That's on our blog. If you go to the website at crackingcryptocurrency.com and go to blog, you guys can see the article that moderator Paul was kind enough to write. It is an introduction to our Discord tutorial for those of you who are new to the server, want to know how to access all the features that we offer, want to know how to navigate. There's information in there on privacy settings, but of course that will be also covered in the video tutorial that we'll be publishing here on YouTube tomorrow evening. So a lot of good stuff going on. Fantastic week, guys. And honestly, just ended up closing out finally my trading journal for January. I'll get the edited, or not the edited version, but I'll get the published version out live. As you know, we're the only trading group that publishes their historical results every single month, month after month. It was a good month for us as well. Actually, one of the better months that we've had over the last 6 months. So I'll have that published. You guys can, of course, always go to results.crackingcryptocurrency.com. I've had hundreds and hundreds of people try to pick apart my trades. There's nothing to pick apart, guys. Again, the only group that publishes their entries, their exits. Oh, and we've got a community of thousands of people that you can go check. Hey, did that dude take that trade? Yeah, he did. Anyways, we've got a fantastic show for you guys today. We're going to cover so much, the FATF and everything. Let's get right into today's analysis, because I do want to talk about Bitcoin kind of heavily today, as I am in an active position. So let's go. Also, let me know what you guys think about that new intro video. It's not the official intro video, but just wanted to kind of show that for you guys. And obviously, a couple of graphical updates to the layout here as well. All right, here we are at, oh, you know what I need to do? Just 1 second, guys. All right. How about we take a brief second and we'll go over here and look at the Kiwi dollar here for just a minute. Apologies for the wait here. I got to get this set back up. I was doing some. What do I got to say about Tesla? I mean, shout out to the hodlers, man. Cheers to the hodlers, dude. That is absolutely insane, man. I'm not going to lie. About half of my friends, half of the people that I consider colleagues, shorted Tesla. And half of them bought the top. I don't know, man. I actually, listen, I have like, I think 5 shares of Tesla. And you know, I bought it a while ago just because because why not hold Tesla, right? It's not a big part of my portfolio. So honestly, I probably don't have as exciting of an opinion as you would want, my friend. I'm sorry. But cheers to the hodlers, man. Definitely cheers to the hodlers. All right, I almost got this set up, guys. Just a second. There we go. Okay, and we're back. We never have to do that again. All right, here we go. Here we are at the live scene. Okay, yesterday we did end up closing. We are at the daily chart of Bitcoin on Coinbase, as we are wont to do. Yesterday we did end up closing in channel. We did close in channel of the baseline, which is a no trade zone. You can see that from the yellow bar printing that was exposed there on the Bitcoin chart. All the premium members saw this. I did end up on yesterday's daily close. Not only was I already in a 12-hour active short with quite a hefty position, but I also hedged at the end of yesterday's candle by closing within the trade zone. That is a proper thing to do. It is more aggressive. Actually, it's more conservative because when you're being aggressive, typically you are looking to take higher risk for higher return. And when you're being conservative, you are looking to, as quickly and as earnestly and as frequently as possible, lock in your gains. So we have seen some nice follow through to the downside here on Bitcoin. Let me frame this again overall because I get these questions a lot. I'm still quite macro bullish on Bitcoin. Doesn't mean that it's not prudent to trade the direction of the current daily trend when price moves in that direction. Only a fool would be trading in the opposite direction of which your indicators are telling you to trade. Now, so here we are on the daily, closing below the baseline. Minx has not crossed below the zero line yet, but we are getting closer. And remember, I've covered this so many times when we're talking about when we're talking about Bitcoin and we're talking about shorts. Line crosses often are not the best at predicting bearish trends. Zero crosses are. Centered oscillators are. Centered oscillators are really good at pulling out those bearish trends. Line crosses can be better to the upside. Again, and this is, I think largely, this is very specific to Bitcoin. I think this is because, and cryptocurrency in general, most assets are stair steps up, elevator down. Bitcoin is stair steps up, elevator up, stair steps down, right? You know, it's almost like if you could invert an elevator, right? It's the inverse of an elevator. It goes up very quickly and comes down very slowly, regardless of what people think. I think people just think that it's the opposite way. I think it's the opposite way because most people in cryptocurrency don't have a lot of experience trading traditional assets. So they haven't sat and watched like price climb up 10% in 6 months, right? They only know like, oh, we're moving 15% in a day or up or down. And so I think a lot of people that only trade crypto, that's kind of their perspective. But anyways, I think the prudent thing, again, off of yesterday's candle close was to be hedged. I am hedged as well. My capital is sitting, my position is covered with a future short position. So my USD equity is locked in. So I'm actually, as price moves down, on my hedge position, I make nothing except for BTC margin, assuming that I close below my entry price. But my USD value stays the same, regardless of whether price moves down or moves up. That is the purpose of covering your spot holdings with a short position. That is the purpose for doing it. It is for protection. I was already in a short position. My entry on my short position was 93.3150. 93.3150. So I've already hit take profit one on that. Take profit one was 90.95. So I have moved my stop loss to break even, and my trade, my at-risk trade, will be closed if price touches 93.3150. Now on the Bybit chart. On the Bybit chart is where I put that position on, and then I will take the new position that signals. I was, quite happy to put that on. I believe it was prudent for me to do. Required a little bit of discretion watching price and seeing that it wasn't having the follow through that I wanted. But again, I've pointed out that pattern as well many times. Let's break down to that 4-hour time frame. Anytime you see something like this, typically when Bitcoin is ranging, that is generally a bearish signal. It happens a lot on lower time frames. It happens, you can see it on any time frame, but it's just this, again, liquidity grab above a range and no follow through to the upside, right? Sometimes if you have follow through to the upside, that can be seen as bullish, but more often in Bitcoin, this is followed by a significant correction to the downside, right? Whether that's 5% or 10%, either way. We haven't seen that much of a correction to the downside so far. Again, on the daily time frame, I do want to point something interesting out. Oh, why are you doing this to me? Okay, I do want to point something interesting out here on the daily. We have actually not, here on the daily, we haven't actually gotten the signal for daily shorts yet. This is exactly what I posted last night. So on the daily time frame, at-risk short positions should not be put on right now at this point in time. So we don't want to be doing that. Again, I took the position on the 12-hour time frame and added a little discretion on top of that. So this was not a general signal from my PTP system. This was a discretionary position as I posted to the members. So right now, daily metrics are going to be 91.11. 91.11.95. If we get a daily close below 91.11.95 on the daily time frame here on Bitcoin, we will be signaling for at-risk short positions. Current take profit zone for shorts is going to be sitting at, let's flip this to the downside. And current take profit zone is going to be 88.62, 85.31 to 82.01. So 88.60 to 8,200. Nice $600 range to take profit in. A little bit higher than $600. But again, that would be your downside target. So I think it's unlikely that we actually breach down and tap 8,200. But again, that's where my discretion is going to end. That's where I'm going to trust the system because this is more right than not, and it makes me money. It's pretty simple. We do have a rising explosion level from Wattatar explosion. We are printing a red column on the daily, but it is neither above the explosion level nor above the dead zone. So as far as volume and volatility go, Bitcoin's really not doing much and not signaling for much follow through. But keep in mind, falling volume, falling volatility is always bearish. All right. So again, on the weekly time frame, and on the monthly time frame. So on the macro time frame here, I'm quite bullish on Bitcoin. I think that this is, I was kind of expecting for price to push higher. That's not what happened. We've come back down into the baseline, which is cool. I was able to snatch my profits out at exactly the right time. Last night at the daily close, I had 5 USDT long trades open, and I was able to close those all out at break even cumulatively. So I closed them all out cumulatively. They all closed at break even because, one was basically at break even, 2 were in profit, and 2 were in drawdown. So they canceled each other out. I was quite happy about that. And the only long exposure that I have right now is my Litecoin trade, which again is still sitting about 20% deep in the profit. So that's okay. I'm going to hold that for quite a long time. So I'll let that thing run, as well as other positions as well. The guys in the group know that. What else to say about Bitcoin here? A lot of interesting things, guys. Closing below the baseline like we have, potentially going to be violating the initiator. I doubt on today's daily candle. The buyback by sweeping the range low that we just saw. Let's go to the 4-hour time frame. We can see this a little bit clearly. Again, so we've established this range in Bitcoin, and we did sweep it here on this 4-hour close. Actually, be kind of interested to see if we got a. Let's save this as a default so I don't ever have to do that again. No, we didn't even get a bottom feeder signal. The last bottom feeder signal was right here on this candle. All right. So didn't get a bottom feeder signal. Minx stretching down into the oversold territory, has not recovered yet. But again, As far as PTP is telling us here on the 4-hour time frame, we actually do have bearish continuation signaling on this current candle for the 4-hour time frame. So let's just go down the time frames here. Daily time frame has not confirmed for full at-risk shorts yet. Let's see what the 12-hour has to say. Has the 12-hour caught up finally with us as far as PTP goes? Yes. The previous 12-hour close, this would have been at about 6 o'clock in the morning my time. We would have gotten that signal for a short. And actually, that 12-hour PTP signal would not be profitable yet. That trade will be invalidated on a close above 94.18. 94.18 is going to be the invalidation level for that trade currently. With take profit zones at 89.60, 87.31, and 85.02 currently on that setup. Flipping over to the weekly time frame, and we can ignore the baseline here for just a moment. But what I do want to focus on is that should we get a nice on the weekly time frame, things seem quite good. Current pullback to 80. Make sure I get my metrics right. Yeah, 84.41. 84.41 is going to be a little bit of better continuation here on the weekly time frame. So above 84.41, we don't have long invalidation on the weekly time frame. So I quite like this. This is even the longer setting on the breaking Bitcoin indicator. The shorter setting is the one that I typically use. But here on the weekly time frame, we've got a 5 days and 6 hours until the weekly closes. So we've got quite a bit of time, but it is prudent to look at to see how it opened up. We have made newer weekly highs for the year of 2020. And again, as long as we are above 84.41 at this point in time, pullbacks to closer to 84.41 are not bad, in my opinion, to add to positional trades at this point in time. But of course, you can always wait for the daily to kind of give you that reentry signal. But again, here, if you're using the longer, the weekly breaking Bitcoin signaled at the first week of January. So you would still be deep in the profit if you're utilizing that for hedging. If you were utilizing this one, then again, you would just be entering into BTC. But what's interesting here is that we also haven't gotten on the longer length. We haven't gotten the break of the initiator yet, which is pretty interesting in my opinion. So we'll come back to this as we get closer to week's end. So in summary, positions should be hedged. We're not looking for daily at-risk shorts yet. So if you're being conservative and trading the daily time frame, as you should, then you're not entered into a position yet. We took the 12-hour position. That's worked out well for us. Closed out all our long exposure with the exception of Litecoin, which was deep in the profit yesterday at yesterday's daily close. And yeah, pretty simple. Now we just wait for a couple days and see if we recover from this area. And if it was a sweep of the range lows, again, not even a bottom feeder signal on the 4-hour, which is the only reversal signal that I currently have implemented in my system right now. And we don't have that yet at this point in time. So again, daily metrics, if we want to start looking for longs again on the daily, we have to close above 95.15. That's going to be above the baseline and above the continuation filter, which is flipped above us. So getting back above 95.15 at this point in time is essential. So price currently trading at, where are we at for the day? 91.8469. So let's take that off for a little bit and let's get a little funky with it. Let's go down to the hourly. Yeah, let's go down to the hourly. So you can see here that we have swept the range lows. We have swept the range lows and we do see some initial buyback. But unfortunately, what does this look like currently? What does this look like currently? This currently looks like a retest of support turned resistance, or a retest of previous demand turned supply. All right. Retest of previous demand turned supply. So you can see that buyers bought here, they bought here, they bought here, they bought here, and they tried to buy again here. And what happened? Position moved against them and they're a little fearful. So price comes back up slightly above their entry level or at their entry level. And they use that opportunity to exit a break even. And that's why the market is moving down and not powering through this. Now, getting a close here roughly above 9,200 could be considered, for those who want to be really, really aggressive, as a reclamation, as a reclaim of that level that was lost, and potentially a good sign of bullish support. Typically, the way that you do want to trade this, however, if you're looking at the price action, is you want to wait for price to not only close above that area of reclamation, but also do a BPC or a rounded retest. So a BPC is going to be a break pullback continuation test of supported resistance. So what you'll see is price go above the area that you're interested in, and you want to see it very, very quickly come back down, test that area, hold, and then push up. And then again, if you want to be even more conservative, there's a little bit more nuance to this. So let's draw this out. All right, so let's say that this is, let's do a horizontal line here. So let's say that this area is the area that we're interested in, right? Seems pretty fair. The line of best fit is what we're always going to use because there is no such thing as the magic line. So what we'd be looking for here is, we're on the hourly time frame. We'd be looking for an hourly candle to close above that level. And then we'd be looking for a low or a wick to hold that level, and then movement to the upside. Now, this candle right here, seeing price hold, seeing the BPC, is going to be an aggressive entry if you enter on that candle close. This entry right here, where you actually wait not only for the candle to close and hold support, but also close above the previous high, is going to be your more conservative entry, right? And I think that's going to be the best. So this is a nice rules-based way that you guys can utilize this system in your trading if you so desire. I cover this in the premium webinar series for support and resistance as well in much more detail. And then again, for risk management, should we close below this level or should we close below this level, depending on how aggressive you want to be? Directly below the line is going to be conservative. Directly below the previous low is going to be aggressive, right? It's also a decent stop loss placement if you want. So we haven't seen any of that. We haven't seen that. We haven't seen any kind of sign of reclamation. We've only seen a retest of a previous area of demand, and so far rejection as that demand has turned into supply, unfortunately, here on the lower time frames. So depending on how aggressive or conservative you want to be, for me, it's quite simple. I've taken profit. I put my stop loss at break even, and if price goes back up there, well, okay, now I'm flat. Woo! Remember, I'm hedged, so it doesn't matter if price moves up or moves down. On the macro, my equity is hedged. And I don't really care about losing BTC margin. I care about losing USD margin at this point in time. BTC margin is fairly easy to reclaim. So we'll wait and see. Let's take a look at sensor charts and kind of see what the intraday is looking like here. I just talked about this earlier this morning with a friend that I trade with. Again, we have this wall coming in. We're kind of testing the significant wall right now, 92.50, 92.60. There is roughly about an 800 BTC wall sitting right there. And we've covered, again, it seems like I've mentioned this so many times, guys, how do we trade these walls? You would want to watch. You want to watch and wait. And as you see, I've been watching this and waiting. Have we seen that wall go down? And again, what are the discretionary, what specifically do we need to watch for? Because three things can happen when we interact with a significant wall, whether it be a buy wall or whether it be a sell wall. So in this case, let's lay out the scenario for what we want to see with a sell wall for using this data to influence the positions that we take. So the first thing that can happen is the sell wall holds, never goes down, you never see it disappear, and price simply rejects from there and moves down and takes out the current range low that we formed, and that can be viewed as a bearish sign, and you can be looking for entries for short positions, right? Number one, we can just get rejection from a wall. The wall holds, rejects price. Fairly simple. Number two, the second thing that can happen is you see the wall disappear, okay? You see the wall disappear, and price begins trading above where that wall used to be. Now, if you are new to trading, you will immediately think that that is a breakout, and you will mark it long. And that is dumb. You should not do that. The reason why, and I don't mean that deprecatingly, but the reason why is because you have about a 50% chance for it to be a stop loss hunt, or excuse me, a liquidity grab, and see rejection. And you have a 50% chance of it actually being a breakout. And I don't think that the risk is worth the reward. In fact, I'm not going to lie, I'm being completely arbitrary about those numbers just based off of my recent experience. I actually think that the odds of it being an actual breakout are typically lower. It's typically usually a rejection. But again, maybe somebody can crunch the numbers for me and tell me how wrong I really am on that. But anyways, there's an easy solution to this. If you're on the 5-minute time frame, which we are on sensor charts, you just wait for the candle to close. You wait for that 5-minute candle to close. If you see the wall disappear on the 5-minute candle that interacts with the wall, if the wall disappears on the candle that is interacting with it, you wait for that candle to either close above where the wall used to be or trade above where the wall used to be and close back below. If it closes back below, it's most likely a rejection and you should avoid going long. If it closes above, it's most likely a breakout. You're free to go long if you want. Manage risk appropriately. So Pretty simple. We can sit here and wait and watch for this. That's going to be, I think, the interesting movement for today, whether that happens looking down below us for support 9170 and 9150. Again, similarly coming in fairly strong with about a 600 BTC wall there. A little bit more, 155 coming in to support around 9100. So little battle between the order books here right now. And we can see Christmas tree as far as the buying and selling goes. Obviously, overall, over the last few days, the bears have had the strength. The bulls are stepping in now and have successfully pushed price back up to retest a previous level of breakdown. And we'll see what happens now. We will see what happens now. Looking at the broader markets. Let's do a little refresh here. Looking at the broader market in USD terms, it has been a good day for altcoins. It has been a good day for altcoins. Icon having a blow off top at 43.2%. And I think, in my opinion, I am starting to see, this is kind of a metric for me, I'm starting to see tweets on Twitter about people talking about holding Icon for years. Let me just tell you guys something. This has been my experience. I don't want to be a negative person. I mean, huge shout out to anybody holding Icon, but 43% in a day. Here's what I'm going to recommend. Take some profit. Take some profit, for the love of God. Because when you start seeing people, there's a cycle to this, right? There's a cycle to this, and you have to understand that there is financing in this. There is vested interest. Individuals who have a lot of Icon, they need individuals to sell it to after a movement like that. Some of this is orchestrated. Cryptocurrency is a very low market cap market. So just be careful out there, guys. Just be careful, man. Buying hype. I'm starting to see a bunch of tweets about people offering ICX advice and how ICX is part of their long-term portfolio, and they just added to their long-term portfolio. 9 out of 10 of them are lying, and the 1 out of 10 of them is a fool. All right, so just trade responsibly, trade reasonably, trade rationally. Okay. But ICX up 43.2, ELF up 25.9, Ion 27.3, Engine Coin up 20.6, Cheese It, I like it, Cheese It, but I know it's Ches, up 10, Block Stacks up 8.1%, Go Stacks, Steam up 8.7, Kyber Network, Nano, Algo, Ren, 0x, XVG. Good day for the altcoins, outperforming Bitcoin by a very wide margin. I will say that the coins that I exited my position out of are not on this list. So I'm actually pretty happy about that. It's targeting inefficiencies in the market, and I was glad to get out at basically no loss, no risk. Let's see here. Is there anywhere I can short Icon? Don't answer that. Let's see here. I don't see any spot buying. Okay. Interesting. Make sure you guys go over to crackingcryptocurrency.com/giveaway. Take advantage of our free t-shirt giveaway and also our free Discord tutorial over on the blog as well. While we are over there, it is 12:30, guys. I want to get to the news. There is quite a lot to talk about. Before we get there, I want to thank today's Steve King. Thank you so much for the subscription over there on YouTube. Before we get there, I want to thank today's crypto comment giveaway sponsor, Spectre Security Coin. Link down in the description if you guys would like to get a consultation on to make sure that you guys are following best security practices. Again, my friends over at Spectre Security Coin are the people that I call if I want help on my security. They've helped me get a lot better at how I do my things personally. So definitely go give them a check. Tell them Justin sent you. And I want to thank them for sponsoring today's XSPC giveaway. And for some reason, the YouTube comment picker is mad at us. So we're just going to do like what we did yesterday. And we're just going to go over to the YouTubes. And we're going to go to yesterday's video. Okay. That's not a real person. And we've got 1, 2, 3, 4 winners. That makes it pretty simple. We give away 8,000 XSPC. That's 2,000 per person. So BPA, DMD, J Jersey, and Crypto Kangaroo. If that even is your real name. Get a hold of me in the Discord, guys. JustinWise5696, or you can message our concierge bot, and I will gladly tip you some crypto. You can also join Spectre's Discord. There is a link to their Discord in our Discord in Spectre's channel. I should make a link for that. I will. And I can tip you directly in their Botsman channel. Thank you guys so much for participating. Thank you to Spectre Security for sponsoring the giveaway. And trade responsibly. Trade responsibly, guys. Okay. We're going to take a 30-second break. We're going to take a 30-second break, and when we come back, we're going to jump right into the crypto currently segment. We'll be right back, guys. Today's top story does come to us from CoinDesk. We're going to be talking about the FATF, the Financial Action Task Force, and its latest impact in the crypto markets with the travel rule. This is something we've been focusing on a lot around the office, and in its bid to become compliant with the latest travel rules, firms in the crypto space may need to adopt infrastructure similar to legacy financial systems like the SWIFT interbank messaging system. This is the unapologetically libertarian blockchain diehards are going to be scoffing at this idea of voluntary complying with these new rules from the FATF, the new standards, but the companies and service providers that are inside the world of crypto, they have to recognize that the clock is going to be ticking on adopting these, to be frank, onerous standards set out by global regulators. Now, while embedding an identity layer over existing protocols, specifically designed to be pseudonymous, goes against everything that is holy in crypto, but the industry might not have a lot of choice if they want to abide by international banking law. And a lot of people are going to have to ask themselves, number go up or number go down. Now, how the FATF compliance would be implemented and what form it will take is something that the industry is going to have to agree on how best to comply. But it has to be done soon. It's a topic we've covered on the show before. Back in June 2019, the Financial Action Task Force, which is for those of you who don't know, that is the global anti-money laundering watchdog. It updated its guidance to explicitly include virtual asset service providers, or as they call them, VASPs. Now, this caused a big stir, specifically with Monero and their updated travel rules. They specified that all VASPs must share sender, which is the originator of a transaction, and receiver, or the beneficiary of a transaction, information for cryptocurrency transactions above a certain threshold. Now, the 1-year mark on the updated travel rules is fast approaching. And the FATF is going to be reviewing progress on compliance and enforcement at its upcoming June 2020 meeting. Meanwhile, FinCEN in the United States in May of 2019 issued its own version of new regulations pertaining to VASPs, stating that firms had 180 days to get their operations in order and meet compliance. This means that the travel rule also carries the added punch of United States law when it pertains to US-based VASPs. Now, FinCEN defines VASPs as any business engaged in the exchange, transfer, or safekeeping of virtual assets, as well as any activities related to issuing or underwriting said virtual assets. Pretty hard to get away from that. Now, opinion is split across the industry on how best to implement an appropriate technical solution. Some are favoring a blockchain-based approach, others preferring a more centralized database solution. But crypto exchanges, which are seemingly at the heart of the industry, will be even more challenged on an operational and legal liability level to roll out a compliant system in mass. And the issue so far with exchanges is related to two critical areas. One, there needs to be some means of identifying individual VASPs. This would be the rough equivalent to the bank identifier code, or the BIC used by SWIFT currently, or something like the international bank account number like the IBAN system. Now, the second issue is going to be concerning the matter of data transmission. The ideal solution for the crypto industry would be collaborating on a common standard for this communication, some form of interoperable message layer used by the network of VASPs to allow transmitting identity, authentication, and other message details to be pinned on top of blockchain transactions. I mean, this is kind of our thing. We better use the blockchain. Now, currently, the industry has proposed some 20 plus potential solutions that they're currently attempting to build or in beta to possibly address the problem. Now, some are relatively small-scale commercial endeavors. Others involve collectives of firms collaborating on open protocol standards. Now, while you may never have heard of these projects before, they do include Bitcoin Suisse's Open VASP system, CipherTrace's Trisa, the Signa Bridge, Netkey Shift, and KYC Chain. Dedicated crypto forensic firms that we've frequently mentioned on the show, such as Elliptic, CoinFarm, and Chainalysis, have all been working on this as well. Indeed, Chainalysis recently hired former FinCEN staffer Mike Mosier to help build the travel rule capabilities into their project. Now, while some proposals favor a traditional approach, using a centralized global registry of VASP addresses as the necessary trust anchor, others are suggesting a decentralized approach involving the use of a blockchain or distributed ledger. Now, quoting here, the assumption that blockchain must have the solution to something that is a blockchain problem might not necessarily be true, as desirable as that may be for folks at an aspirational level or philosophically. This is from Sion Jones. He's the senior partner at XReg Consulting. They're working on the InterVASP messaging standards, the JWG VMS system. Now, Malcolm Wright, who's the head of AML, anti-money laundering at Global Digital Finance, said his view and the view of regulators on a whole is that there needs to be more than just one tech provider to the solution, quoting, "So it might be that Coinbase chooses tech provider A, Binance chooses tech provider B, and so on. So we end up with a matrix, with smaller exchanges copying the larger ones that they want to work with." Switzerland has the Open VASP project, and it's what you might expect from a country famous for its international banking prowess, with plenty of experience meeting existing FATF rules. The Open VASP project is being headed up by Bitcoin Suisse and also includes the exchange known as Like, as well as crypto banks SIBA and Signum. Now, with Switzerland seemingly trying to position itself as a leader in the emerging crypto industry, they seem to have taken a practical approach, building a solution they describe the industry can start using right away. And a key design principle for Open VASP is decentralization, with its developers claiming that this will help avoid the mistakes of the past, like having a single point of failure, centralized servers, and directories. In order to achieve decentralization where it's deemed desirable, Open VASP is leveraging a solution of features from Ethereum. Exchanging personal data between VASPs in different parts of the world is going to require detailed legal framework in order to not run afoul of regulations like Europe's General Data Protection Regulation. That's the GDPR. This coming from CoinFirm's CEO, Powell Kuskowski. For this reason, CoinFirm specifically is working on their own system, and they have pulled in Gibraltar-based cryptocurrency lawyer Joey Garcia to help work out the legal details of what they need to build. They are currently focusing on a high throughput, permissioned blockchain for writing the fingerprint of a compliant transaction built on the enterprise-grade DLT Hyperledger fabric. The latter employs a private channel architecture, which has been compared to private message channels on Slack. Now, there are two parts to consider when you are talking about the travel rule, according to Kuskowski. One is part technological, and the other is regulatory. Anyone who is touching this has to have someone from the legal space. Jeffries of CipherTrace said that solving the technical challenge is not any greater than the operational hurdle, or what he calls the sunrise problem, switching on the system for 500 VASPs at once. And as G20 countries gradually begin to roll this out, increased jurisdictional arbitrage also seems likely. According to Jeffries, people are going to lean toward the countries with either weak implementation or weak enforcement, Jeffries said. It will be interesting to see how this scenario plays out. So you're welcome. Tuesday, and we get to come in and lay a bombshell on you. I think that for a lot of traders, you guys aren't going to see any direct changes or effects in your life immediately. Most traders with serious capital are already utilizing KYC AML compliance, as are the majority of retail traders as well. It's actually fewer and fewer traders right now who are trading on unregistered, unlicensed exchanges with no compliance or regulatory framework. So I think that for a majority of individuals, a lot of traders watching this, your daily lives aren't going to be affected. But for those of you who are looking for jobs in this space, in the industry, this is something that you want to be educated about. This is something you want to be knowledgeable about. And this is something we want to be aware of, I would say, over the next 6 to 12 months as we see exchanges move forward with compliance, or they're going to face penalties. And again, that can put some burdens on the individual retail user integrating with the platform, or really realistically, actually little on the retail user. This is going to be more burdensome on the corporate clients and on the commercial clients, or what that really means in cryptocurrency is large money traders, particularly those who have agreements or partnerships with exchanges. But we've been talking about this for a long time, right? It's kind of funny that the narrative that we had throughout all of 2018 was institutions are coming, right? The institutions are going to come pump our bags, guys. No problem, eh? And yeah, they are. They certainly are, but not for nothing. Not for nothing. So it's listen, I don't want to be depressing or negative or anything like that, because this is far from the case. This is really good overall for price. This is fantastic for price. I don't know if you guys have noticed, but the traditional markets are in something like a 60-year bull market, right? So you guys want that from Bitcoin. Like, I don't think anybody watching this channel or involved in Bitcoin right now does not want Bitcoin to go into a nice, sustainable, long, profitable 100-year bull market, right? This is price discovery. This is volatility. This is the things that happen, right? That's what we all want. That's what we want. That's why we're in Bitcoin. We want to be able to pass something that is safe and valuable and secure, regardless of how people use it, down to our children, right? And we want to put the damper on centralized banking systems, robbing the monetary value of our earnings, of our savings with inflation. Now, here's the nice thing about all this. It's very, very hard. Not impossible. Not impossible. I mean, obviously you can have collaboration between the Bitcoin Core Protocol developers, but the Bitcoin Core Protocol is already implemented and run by the network. So its permissionless, trustless, decentralized system cannot be affected unless you're talking about a massive overthrow level, which I think we're past. I don't think it's possible right now. Bitcoin has too much support. You can have market manipulation, you can have all kinds of factors, but it becomes very, very difficult for the government to directly control what goes on with Bitcoin. The CIA investigated shutting down Bitcoin back in 2012, and they at that time thought that they couldn't. And now it's 2020. I don't think that they can. I don't think that they can shut the network down. Which means that the network is not going to fundamentally change. So you are still able to utilize Bitcoin if you are a privacy advocate, if you are a security advocate. If you want to keep your holdings safe, private, and secure and pseudonymous, you can still do that. But if you're going to pay to play, if you want to trade for money, if you want to be involved with the exchange or transmission of USD value for commercial purposes or for any professional purposes or for any legitimate purposes, you're going to have to comply with this regulation, the way that I understand it. Or you're going to have to march in the streets. I'm down for that. You know, I went to a bunch of rallies when I was in my 20s. So again, this is, I want to use this as an opportunity to say, if you have no experience with setting up a cold storage wallet, if you have no experience with how to, if you don't even know what a UTXO split is, if you have no experience with holding your own private keys, I don't want you to be like Peter Schiff. I don't want you to foul this up. Go figure out how to do it appropriately. There's links down in the description to great educational material. We have partners to help you out with this. We have a booming channel and community to help you understand how to do this stuff securely if you want to. There are so many options. Bitcoin is whatever you want it to be. Are you hardcore libertarian, anarchist, want to burn the government down? Cool. You better learn how to hold your private keys privately and securely and not mix your UTXO splits. You want to download Wasabi Wallet. You're going to do some mixing. Go check out Blender. Are you just here to make money? What do you care? Right? Go trade on Coinbase. Check out Bybit, link in the description. There's a ton of options. If you're here for the tech, then what do you care? Go develop, right? And then there's so many tertiary other aspects here to affect this. But it's mostly burdensome and mostly affects businesses and crypto exchanges and money transmission services that are currently operating with a cryptocurrency framework, and they're going to have to play ball. So we're going to see how this plays out. A lot of information still, a lot of interesting ways to come out. You guys know how regulation works. But what's interesting is that you guys do know how regulation works, and they're kind of not playing around on this. So I'll keep you guys updated on this as much as possible. With that being said, we're going to get to the question and answer section. Let's go. So I'll hop back over here to Monsieur Bitcoin and see what you guys got for me today. Thank you so much for my team over here reminding me. We are going to talk about bottom feeder today. I said I was going to share the bottom feeder data from the Analyst team. We've been studying, we've developed a new indicator and strategy called the bottom feeder. We're going to go over that here in just a second. First, I want to make sure that I take care of my D-Live brothers and sisters over here. So let's throw some lemons in the chest for you guys. Boom. Got them lemons in the chest. We're going to share the bottom feeder data right now and talk about that, and then we will distribute those rewards. So the bottom feeder. So let's talk about it. So over the last few years, my team has gotten much better at programmatically implementing rules-based strategies and indicator-based strategies into code, right? Whether we're talking Python or whether we're talking Pine, and the programming language that I've become proficient in myself is Pine. This is a good focus of the course. We cover Pine. We're going to add much more to this over time, but we do cover how to backtest your PTP strategy in Pine programmatically so far, and we will only continue to add to that and eventually add things like Python as well. And you guys know that we are trend-following traders. We are trend-following traders by profession. And the reason why is because that's going to give you the highest probability of success. Bitcoin is a trending asset. Why are you trading reversals? Okay. However, you don't, something that's very interesting as you become a trader is that you begin to realize that you can make money in all sorts of counterintuitive ways. All you have to do is have a technically proficient strategy that performs well in the market, and you can make money. That's your job. Everybody comes into the market and initially they think that they have to catch these movements. You don't really have to. Look at market making strategies. They don't care which way price goes, up, down, left, right, or sideways. They just want there to be volatility. That's how they make money. And they make money hand over fist. And you need high frequency, and you need a programmatic edge, and you need capital to be able to do that. That's it's probably the most competitive field in the business as far as cryptocurrency goes. If you guys think that swing trading is cutthroat, man, go hang out with a market maker. So we're always looking to improve our edge, right? This is what I tell all of my students. Build your higher time frame trend following system for this asset class and get profitable doing that. It's not difficult to do. I'll walk you through it. After you've done that, look for unique opportunities to add to your profit factor. Okay? This is how you build a discretionary system. I've gone over this so much. You build a mechanical system first, right? Trend lines, price action, swing failure patterns, support and resistance, supply and demand, volume profile, open interest, liquidations, funding rates, all of that stuff. It's discretionary. It's discretionary. I have no problem. Some of my best friends are discretionary traders. I take discretionary trades, but there is a difference here. I didn't start there. I started by building a mechanical, rules-based strategy, and that is the proper route, in my opinion. I am more convinced of that than anything I've ever been in my life now that I've educated hundreds of traders how to do what I do. You build a mechanical, rules-based strategy where you execute like a machine. There is no thinking. There is no emotion. There is no discretion. You do what the system tells you to do, right? And I lay out how to do all of that in PTP. That's what you build. But while you're building it, you will notice things that interest you, okay? And as you notice those things, you write them down. And once you've built a profitable mechanical strategy, you go back to your list of notes and you say, let me go back test these interesting ideas to the best of my ability and see how well this pattern plays out and how well I can write a rules-based set around it. Eventually, over time, by doing that, you will notice patterns in the market that you uniquely notice that you find have a high probability to return results, profitable results. And that is how you build. You have mechanical strategy over here. And then over here, you build discretionary rules-based strategy. Okay? Means that it takes your discretion to execute a trade. It's not an objective signal, but you have rules based around this, probably with your stop and target system and exactly, what needs to happen within this realm of discretion for you to actually enter into a trade and how you'll manage it, right? Generally, the most important things there are going to be invalidation, right? Let's say you take a discretionary trade. You have to have the discipline that if price hits your invalidation level, you get out of the trade, right? The biggest problem with discretionary traders is that they hold losers and they take profit too early, right? Common problem. BTP solves this. Bitcoin fixes this. So anyways, in that same vein, an indicator and strategy that we've developed off of our specific noticing nuances in the market is called the bottom feeder. And, this wouldn't have really been possible. I'm actually going to show you guys both. This really would not have been possible without developing Minx, which is probably our most popular indicator. Minx is kind of interesting in that it can also trade. It's a great trend following strategy, but it can also trade reversals. So we have two implementations of the bottom feeder strategy. We have a conservative and aggressive. The aggressive trades about twice as much and it returns about twice as much net profit, but it has 3% higher drawdown. The more conservative strategy only has a max drawdown of 5% over a 2-year period, but it returns about 62% of the profit. So I'll just show you guys this. This is accounting for position size. I've been doing back tests for a long time. The problem with most people who write strategy testers is that they're completely unrealistic results. They're not accounting for things. They're not optimizing for drawdown. They're not position sizing. They're actually, if you don't know how to write strategies in TradingView strategy tester will actually let you trade money you don't have, and this completely throws out your results. So most people just do not know their way around a strategy tester. This is something that I'm working on educating all my students on how to do. Again, that's already incorporated in the scripts that I've already provided. That's already incorporated in there. So largely I've solved this problem for them. But the big thing is position sizing. So this is, I'll show you guys bottom feeder 0.1. This is the daily time frame we are testing here from January 1st, 2018 to January 1st, 2020. And this returns it's profitable 86.15% of the time. That's how many times it's right. Has a profit factor of 5.247, max drawdown of 5.05%. Average trade's about 1.35%. It takes about 65 trades in that 2-year period. So that's only about 32 and a half trades per year. And that's fine. It's not a frequent trader. It is not a bottom caller. It's a bottom feeder. You're nibbling off the bottoms and it's just right almost all the time. So that's good. That's great returns. 87.57% over a 2-year period. You've beat every other known market in the world. And very little drawdown compared to your capital. The more aggressive has a little bit higher drawdown of about 8%. Returns almost twice as much profit though, 159%. Trades more frequently though, trades almost more than twice. Now, this has market fees included. So again, we are scaling out with limit orders. We're entering market, we are exiting with limits. So there is the kind of counterbalance there. Remember that on leveraged exchanges, we're going to get paid to set limit orders and we're going to pay to set market orders. So roughly the same here, though obviously with that little bit of higher drawdown, we do pay a little bit more. We do lose a little bit of profit factor there. So stepping down from 5.247 to 4.677. This is a strategy that I'm currently running live on my account. And the way that this works is this does not replace your primary PTP strategy. This is just a tertiary strategy that we will offer to our members, something that they can add to their charts that eventually they will be able to automate. That's a service we will provide. And this is just something that you allocate capital to. And it just once in a while, you get a trade, you get a signal, and it's a good addition. And over time, you will build these discretionary strategies that add up to form somewhat of a basket of discretionary systems, right? So that you're always active. You're going to have market-specific discretionary strategies. You're going to have sector-specific discretionary strategies. You're going to have broad, you're going to have broad, all market encompassing discretionary strategies. And then you're going to have market-specific trend-following systems, mechanical systems, and you're going to have broad mechanical systems. This is what it's like to be a strategy builder and trade programmatically and trade based off of rules rather than, hey man, like I really feel like price is going to fall right now. Lesson 1, man, you don't know as much about the market as you think you do. You know, I tell myself that all the time. When I enter into trades, I know that it's not because I'm smarter than the market, because I'm not and you're not. But my system is. My system is smarter than me. So anyways, I hope to have that up on TradingView. There's only one thing that I need to do. I'm going to be publishing both strategies combined into one. So I need to combine both the strategies into one script. So I'll do that. I should have that actually done tonight. And then I have the study right here. And this is how it works. Here's the study. And what I will do is, I already have the line drawing in V4. TradingView still has an issue with V4 right now. I don't know what's wrong with their server. I have a support ticket open with them, but I just going to bug them more until they actually solve it. That's how I've gotten them to solve all my problems. I'll just keep calling. All right. Solve my problem or I'll just keep calling. But I will update the, I'll put a drop down in there if you want V3 plotting or V4 plotting. And then that'll be done. So I'll publish to the premium members. This will be a invite only indicator on TradingView. You have to be a premium member to get access. But I will offer, I will put up both the strategy testers so that you can back test it yourself. And then I will also put up the studies so that you guys can trade it live on your charts. And then there's alerts in this. So you guys can already set this up with something like AutoView or Gunbot or whatever system that you're utilizing to trade, cut 3 commas, for example. But eventually we'll offer that service on our own and it'll be better than... Like to meet some market makers, tell them I will buy the internet drinks. Okay. So I want to thank senior analyst Alex. He was instrumental in helping create the bottom feeder strategy. Been working on this for the last 2 weeks and really proud to get it out there and publish, guys. Getting to your guys' questions, let's distribute the rewards over here on DLive for you guys. Firing the laser. Thomas Butnix, he would like to request the pound yen. Let's go take a look at the pound yen for you, baby. Excuse me. Pound yen is in a no trade position for me. Choppy, man. Choppy on the daily. I'm pretty much staying away from this. Now, Minx is in the negative aspect of its wave cycle right here. We are below. We do potentially have some, it's really choppy, man. It's really not smooth, but we do potentially have regular bullish divergence here with a lower low, but a higher low in minks. Water explosion level is still quite negative. High volatility. I mean, the pound yen is going insane right now. I don't have any dogs in this race, man. We got a reversal baseline bounce right here. And then that was a great continuation signal right here. And then you've seen price basically just come all the way back up on today's candle. We do actually, I mean, we are in shorting mode here on the pound yen. I think that we're having a pretty insane market buy. This is kind of broad all over the place. We're seeing a spree of buying. And I think we're going to see which way the market really wants to move here, right? Because again, the Shanghai comp, dropped down about 9% yesterday. That is getting steadily bought back. Stocks dropped as well. They're having a good day. Tesla at all-time highs. Of course, that's just a novelty stock. That's just a vanity stock. But again, the market seems to be responding well today as Bitcoin is moving to the downside. Gold and silver doing some interesting things as well. And again, the foreign currency markets obviously responding to this kind of fear and uncertainty throughout the market, right? So you have your stable currencies that are considered safe haven assets, things like the Swissy and things like the yen. You had them pumping, and then you had the Bank of England putting out the report. The other day, Mark Carney spoke, and the pound starts pumping. That's why we had taken the pound Kiwi. That was a fantastic trade that just got stopped out today. But the pound dropping, and now actually, interestingly enough, pound Kiwi dropping over the night, but the pound yen putting in some nice activity. So I'm not exactly sure what's going on. Maybe this is an effect of the Asian markets, and we're continuing to see further sell-off here, especially over in Japan. Maybe the fear is reached, because I don't feel this is fundamental strength in the pound. I see this as kind of fundamental weakness in the yen on this. And not fundamental. Again, I think that the yen is the one to long over the next time period, but we'll see. We'll kind of see how Japan's economy is affected by the kind of coronavirus panic. And largely, I think this is largely overblown and overswept, but we'll see. We'll see. But anyways, sticking to the raw technicals on the daily, man, today is going to be a continuation short trade. We do have purple dot continuation below 142.918. So as long as we're closing below 142.918, I would be looking for a continuation short here. Minx is giving us a counter trading signal, and it's already telling us to be looking for shorts and not longs anyways by dint of being below the zero line. And we are actually getting across below the noise line today. Water tower explosion is still bearish. Current candle is below the explosion level, and that's always what we're going to get on anything like a reversal baseline bounce or a re-entry signal for the most part. I would be managing risk on this if we get a close above. Let me make sure that I got my thingy right. I do not want to see price close above 143.344. If we close above 344, then I would consider the trade a wash. We actually need to be above 591, 143.591 to be looking for positional long trades on the daily time frame, because my initiator has flipped to the downside and is in bearish mode. Or excuse me, you know what? I'm sorry. I misquoted you the numbers. 142.918. That's invalidation for shorts, because that's where our continuation filter is. So if we get your risk to reward here on a short is fantastic. You're considering this a reactionary buyback, good volume, good strength, but again, screw them, man. The market, the overall trend is to the downside. So 142.918. If you get a daily close above that, the trade's invalidated. You're in a no trade position. If you get above 591, 143.591, you can take the trade long. But I wouldn't touch this right now. One more bullish candle, and yeah, maybe we'll go for a trending long. But right now, looking at this, if I wanted to be very aggressive, I would take a continuation short at 0.5 or 1% risk. Roy Coin asks, what's the difference between the bottom feeder and the buy signals from the breaking Bitcoin indicator? The breaking Bitcoin indicator gives trend following signals and continuation signals in an established trend, and the bottom feeder literally catches the bottom of markets. It is the kind of pinnacle of a reversal indicator. Midwest Attempt says, XLM BTC, my PTP system had me long as 689 at yesterday's daily close. I kind of feel like playing that well, what can I say, man? Junior analyst, Midwest Attempts, long on XLM BTC with its PTP system. All I can say to that is this, man. Tell your friends, tell your family. Good trade, brother. Over here on DLive, Wendy 2, Midwest Attempts, and Sanic 2 Fast. Congratulations, guys, on the DLive giveaway. Sorry. Don Camden threw 20 crones earlier, my friend, and I responded briefly to you. No disrespect. Let me respond more at length to you. Let's go look at the Tesla chart, my friend. He asks, drop some knowledge on Tesla. It's not Tesla, it's Tesla. Listen, massive gap to the upside, currently at 928.42. I've got some friends that shorted Tesla at $900 or claim to have shorted Tesla, right? You know, they just kind of sent me those YOLO messages earlier this morning, and I'm not necessarily recommending that. Listen, guys, don't short parabolic markets, right? I know it's like so attractive, man. I know it's so attractive, but as a retail trader, man, like just don't mess around. Just don't mess around. Listen, buy some puts. Buy some puts. Don't sell any options right now. Don't buy calls. Don't buy puts. You're ridiculous. Buy some puts on Tesla at maybe like 900, right? Cover your hedge bet. Look for the gap to get filled. I mean, it's redunculous and it's awesome. And the cult of Elon Musk is kicking ass right now, dude. Look, am I going to tell you to buy this? No, man, not in a million years. And I don't care if Tesla runs to like 10 million, right? You enter into the right trade at the right time. I've been in trades that have gone up 100x. I've been in trades that have gone up more, right? I'm a crypto guy. I was in crypto in 2016. I've seen some gains. And Tesla is super awesome and fantastic. Again, I have like very minimal dogs in this, you know, what's that saying? Like horses in this race, dogs in this pony? I don't know, man. Like who's putting dogs in ponies? I don't even know, man. Somebody call the hospital. But I own like 5 shares of Tesla. And, you know, shout out to the cult of Elon Musk. I don't really know anything. I don't really know anything that probably anybody else does, or that everybody else does not already. Just, you know, basically what some of my friends who are actively trading stocks are saying and kind of the hype around on the media. It's all the, you know, if you're a trader and you've optimized your like news feeds to like just trading information and investment information, it's all I saw this morning. So, typically that's my kind of biggest knowledge to like stay away from the market. Or again, in the realm of stocks, I start to think like, oh man, look how big that candle is, dude. If we get a movement in the opposite direction. But again, I don't short parabolic markets, and I don't think that you should either. Maybe buy some puts for 900. Just saying, they're probably really expensive right now. So maybe just stay the fuck away from Tesla, man. But you know, again, listen. Cheers to the hodlers, man. Congratulations. This is a great example of when discipline. This is the difference. I want to explain this very clearly, right? And I've said this so many times. And here's the thing. I've had some people. I remember when I was a novice trader, right? And I remember hearing somebody like me say this and thinking that they were silly because they were missing out on gains, man. Like, are you crazy, man? If I would have just bought Tesla, man, at like 200, dude, I'd have been rich. And you're sitting here telling me not to buy it. Look how high it is. It's going to go higher. I remember thinking that. I remember thinking that when I didn't know anything about the markets. Okay? It's 10 years ago. And I'm here to tell you again, just like that dude told me. And I didn't believe him then, and you might not believe me now. But listen, man. The difference between an unsuccessful trader and a successful trader is sticking to the plan. Okay? I don't care what Tesla does. It's not my trade. Right? I have other trades. And all that matters at the end of the day is, are my trades good enough to pay my damn bills, provide for my family, and allow me to enjoy my life independently? The answer is yes. Okay? I don't need Tesla to do that for me. I don't need Bitcoin to do that for me. I don't need ICOs to do that for me. I don't need the latest market trend. I don't need the hottest indicator. I don't need the latest craze. I just need me, my brain, and my discipline. That's all I need. It's all you need. It's all you need. Put in the work, build a trading system, study the markets, kick some ass. Okay? But this one's for the Tesla hodlers out there right now. All right? Live at the Tesla studio right now. And listen, guys, listen. So you can see right here, a little bit above where we're going to be here in about a month. Yeah. Oh, really? Oh, thank you. We're going to go to the moon. to the moon. Or, you know, another way you could look at this is all right. Anyways. B-Flow says, if you get a short signal on the daily, when you were already in a short from the 12, would you add to your position? Yes, I would. The answer is yes. Wayne Arndt says, when I say that I'm planning to hold Litecoin for a long time, do you mean over a year potentially, as long as the technicals stay strong? You know, honestly, with the trade that I referenced on Litecoin, right? My trade is predicated on the idea that Litecoin is a fundamentally strong and valuable chain. It has come down to a significant level of support recently, and this is a level where it has put in 100 to 200% corrections from multiple times historically, okay? And only one time historically has it gone below this level. And so I've laid out an invalidation level. I have allocated 5% of my portfolio of my account to Litecoin, and I'm out when I'm invalidated or I'm out when I get filled. It's that simple. Like, for example, and I pretty much ignore like what goes on with my trading strategy on that, right? That's a discretionary trade. I'm either going to be right or I'm going to be wrong. It's that simple. So I'm not looking for 20%. I'm looking for 100%, right? I'm looking to turn 5% of my account into 10% of my account. And, you know, I have the luxury and the ability to do that because I don't do that too often. And I am going to put that money on Litecoin because that is one of the fundamentally strongest coins that I know of and believe in. I know a lot of development that's going on Litecoin. They are closely integrated with Blockstream, for example, and the Liquid sidechain, or more specifically, there's a lot occurring there. Litecoin is going to be the chain that everybody goes to if there's ever anything wrong with Bitcoin. So it's good. It's good, man. I don't want to kind of feed into the Litecoin is Bitcoin silver, blah blah blah. But it's a valuable chain for sure. And then on top of that, as far as my strategy goes, I'm still like trading Litecoin. Like, for example, you know, for me that I feel like I almost broke it. For me, like that money is tied up. Like I don't concern myself with that trade. I don't really look at it. It's either going to win or lose. But with Litecoin, I still do look at Litecoin from a totally different perspective. So, like for example, last week I took Litecoin USDT long on top of the Litecoin Bitcoin trade that I already had, right? Which I understand for those who understand, like, you know, base pair, quote pair, like that. It doesn't really matter, but it does matter because if you were holding Bitcoin and then bought Litecoin, you have a different cost basis than if you bought Litecoin for USDT, right? Even if you bought it at the same time. Yeah. Moving on. You have to, you know, like what margin did you start in? What margin did you get to? And how did you go there? Right? You know, these things matter. The Advanced Trading Journal does this, which we offer to premium members. So, and what did we return like 15% on that trade, LTC USDT? Yeah, we closed that out on Saturday. Yeah. Closed that out on Saturday, like right before movie night. We closed that, or during movie night when we were watching The Big Short in the community. That we closed that one out. So yeah. And Jai English asks, do I find that I get better confluence and results if I have one of each: trend, volatility, momentum, and volume indicators to use? An initiator, confirmer, volatility, baseline, bam. That's it. You need something to tell you when to go, if it's okay to go, how far to go. All right, open the chest. I shared new bottom feeder info. I only went 20 minutes over. My editor wants to kick me. And yeah. All right, guys, make sure to go check out the giveaway. Crackingcryptocurrency.com/giveaway to win a free t-shirt. And check out our new Discord tutorial on the blog, on the website, crackingcryptocurrency.com/blog. Click on the new member article. We'll have the Discord tutorial video coming out tomorrow at 6 p.m. Central Standard Time. And make sure to check back to the channel tonight at 6 p.m. To catch the Breaking Bitcoin bits for this evening. You guys have been absolutely awesome. Woo. All right, we did it, guys. Only 20 minutes over, guys. Thank you guys so much for joining me for another exciting episode of Breaking Bitcoin. I hope you guys have a fantastic rest of your day. I hope that you trade safely. I hope that you are excellent to one another. If you guys enjoy the content, make sure to check us out. Oh, it's over here, isn't it? Make sure to check out our social media out, and make sure to give the video over here on YouTube a thumbs up and subscribe to the channel if you have not already. It is through your support that we're able to continue to come back every single day and make awesome content. Big shout out to my team for today's episode. And you guys as well. Much appreciation, much love, guys. Stay hustling, stay true, and I will see you guys tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin Market Update. And we will come back to see if anybody that bought the Tesla top has been liquidated already. Tune in tomorrow to find out. Dun, dun, dun. If you have any questions, comments, concerns, sarcastic remarks, or death threats, leave them in the comment section down below, and make sure to hop in the Discord. Link in the description down below to keep up to date when the show is not live, guys. I'll see you guys tomorrow. Cheers.
Bye.